some of the numbers we should have known were quite a bit higher than what they should have been. So having a feel for that, I think about we've built some houses and going back to, hey, if I'm going to do a custom home, we're going to itemize everything that's going into this house.
From cornfields to high rises, office to industrial, houses to hotels, and every other asset class in real estate, we cover the people, the projects, and the profit. Welcome to the Investing in Iowa show. This show is for go-doers, action takers, and business owners. It's for people like you who are sick of Uncle Sam taking a huge bite of your apple. If you're looking to get ahead of what's taking place in Iowa, learn who is doing what, and how you can get in on the action, you're in the right place. Hosted by Neil Timmins, an Iowa native who has been involved in over $300 million in real estate, right here in Iowa. Recording in studio from West Des Moines. Here's your host, Neil Timmins.
Kyle Clarkson's here. Welcome to the show.
I appreciate you having me. Thank you. Looking forward to it.
Say for the audience's sake, those who don't know you, who are you? Where are you from? What do you do?
I'm from Des Moines, born and raised in Ankeny, and been selling real estate in Ankeny, Des Moines for 20 years. 2004, jumped into real estate, followed the family business. So doing it and having a lot of fun with it.
I didn't realize until right now that we got in the industry at the exact same time.
Oh, you were 2004? Yeah. Good time to get in.
Good class. Good graduate.
Right before everything crashed. So it was,
Exactly. All right. So you're from here. You're from Ankeny. Talk to me. It's the family business.
Yeah.
Right? That's where you cut your teeth in. How many generations? Who came before you? What did they do?
My grandfather was in real estate. He opened his own real estate company, I think 50s, 60s, something like that. He brought the Century 21 franchise in the 80s to Des Moines. And then my dad and my uncle both went to work for him. They were managers for him at Century 21. And so a little bit of a family business. My sister's a licensed real estate agent. My dad and uncle still are licensed real estate agents. So just kind of jumped into the family business.
What were those conversations like growing up at home?
Yeah. The ones I remember the most was, when my dad had a bad day. Because you work with people and people can let you down, or maybe you invested a lot of time and energy and then they didn't buy a house or worked with someone else. And so I remember those moments more than anything because, they kind of stuck with him, and he's the type of person that gets really invested with people in a positive way and invested into them. And so I think you always feel like there's a letdown in a relationship when that happens. And so I remember those moments still. And now I feel those moments from time to time.
Yeah, because it's an investment. It's a personal investment. It's not just a business piece.
Right. Yeah, right. That's the beautiful thing about real estate is, there is a business piece, but man, the amount of time and you spend with people, and people are calling you and, hey, we're having a baby. Nobody knows yet. Or, last week, hey, we're getting a divorce. Our kids don't know yet, but they're calling you first because there's major life changes, good and bad. Correct. And so you kind of get to go through life with people. So,
when did you know you wanted to be in real estate?
When I didn't know what else to do. I got to a point where I'm like, what do I do next? And I'm like, well, if my family can do real estate, I think I can do it too. Yeah. So
was that during college, post-college? Where was that?
It was post-college. Like I didn't have this great dream I'm going to follow in my father's footsteps. I'm going to follow the family business. I got to a point where I really didn't know what I was going to do next. And real estate seemed like my family had done it. They knew it. I'd been around it. So I'm like, I'll give this a try. Yeah. And so I end up following in my footsteps, my dad, and never intended to do it. And from being a broker to a trainer, it's kind of funny because he was a broker at Coldwell Banker. He was a trainer at Century 21. Well, I was a broker at Century 21 and I was a trainer at Coldwell Banker. So, and I have his Century 21 gold jacket in my closet still. So,
that's very cool. Talk to me about I'm curious on the training side of things. What does one learn? What were the benefits that you got out of that experience?
Oh, that did more for my business than anything. So I jumped in 2004. My dad was a great salesman, and Coldwell Banker was great at training and sales. I learned the sales side, and then the market tanked. And, we had coffee recently, talked about the good and the bad of that. But at that time, I didn't know what I was going to do. So I became the trainer because, those that can't do, teach. So I became the real estate educator. It was at that time when I really started studying real estate and realized this is more than just making sales calls, whatever. Like, I need to build a business. And so learning during that time what it looked like to run a business just happened to be real estate. And certainly the sales skills that I learned early in my career were beneficial. But it was those 3 years as a trainer, they did more for my business than any of the other 17 I've been in it. So,
yeah. That's incredible. So you've gone on to build a business and have a team, have a structure that resembles a business. Not just a job in real estate.
That's right. Yeah.
Tell me about this. What does that look like?
Yeah. I mean, so it started, I got into coaching. I have the same real estate coach that I had now for 7 or 8 years. And, I started an LLC. I started paying myself a salary. I started hiring employees. I started spending money on marketing and, just things that normal businesses do that I hadn't really done. I just kind of was a hope and a prayer that, hey, hope the phone rings and pray they actually buy a house. And now I had a plan. And so that has grown over time. And we were talking before we started here, some of the things that work and don't work, and the ones that don't work, you learn from and grow from. And it's all been a process.
Yeah. Well, one of the things that I think is unique about you is that you've invested very heavily in your business. And then alongside that, you got a handful of investment properties, things that you purchased, which I think runs parallel to the thought of successful business owners, successful attorneys and doctors, where they stay in their lane. They do what they do exceptionally well. They earn very good money, and then they deploy that capital someplace. And oftentimes, they pick up a property, either directly go off and put it together, or indirectly they invest through people. Tell me about your experience in investing.
Yeah. When we are around real estate, it's much easier because we're around it. So for me, it was something, again, when I got back into selling after my 3 years as educator, as we started going down that road. I mean, that was one of the things I knew I wanted to do, was start investing in real estate. And so I've invested on the new construction side a little bit. And then we bought a couple vacation rentals that are outside of the Des Moines area. And then my first one I bought was a duplex in Ankeny. It was a good opportunity that presented itself because I was in real estate. I heard about it. I wouldn't have heard about it otherwise. And so jumped on that opportunity and, currently own a 4-plex in Des Moines. And so, it was being around it just afforded itself the opportunity to jump in.
Tell me about the duplex. How do you manage that?
I have a property manager. So one of the things, I love my father, but I watched him the time he has always managed his own. And so he's got a couple of rental properties and he's always managed his own. And I would see him trying to track down money and trying to get things fixed, and just the time and effort and frustration that kind of came along with doing that. And I'm like, I don't want to do that. So when I bought mine, I called a property manager and I'm like, if I know I own this, I'm going to sell it, because me being a property manager is not going to work. I think it'll hurt other things I want to do. And so I told them, I'm like, you just take care of it. I want to own it. I don't want to mess with it. And not that I don't want to have a relationship with people, but I don't want to know who lives there. And I don't want to have to, hey, if they didn't knock on their door, if they're not paying rent and all that stuff.
Hi, it's Ava Baukamp, the Investment Relations Manager for Neil's firm, Legacy Impact Investors. I'm inviting you to join us for our next investor workshop, our monthly legacy briefings. In these tactical Zoom calls, we cover topics and case studies for subjects such as taxes and depreciation, navigating macroeconomic shifts, and evaluating deals as a passive investor. At each virtual workshop, we are joined by an industry guest who covers their topic in 45 minutes or less. No fluff, no pitches, just education and conversation with an expert each month. Every workshop ends with live Q&A from Neil and our guest. All briefings happen on the last Tuesday of the month at 3 p.m. Central. If you can't make it live, recordings are sent out exclusively to those who've registered in advance. To join us on the last Tuesday of this month, visit legacybriefing.com. Go to legacybriefing.com to register. If you're a first-time registrant, I'll send you a free resource at sign up. Head to legacybriefing.com and I'll see you soon.
You want to be an actual investor.
Yes, not a property manager.
Not a property manager. No, and it's a component of the business of investing. About how do you do that and how does it get executed, but it doesn't have to be you. And if you were to, the management component has a cost associated with it, whether you do it or whether somebody else. So what I'm saying is that if you, Kyle, had to do it, the cost is much heavier.
Yes.
It's a much heavier burden.
It is. Absolutely.
Yep. I'm curious as to how long have you owned that?
I think it's probably been maybe 5 years or so, somewhere in that ballpark.
And what's happened to the value of that?
it's doubled, maybe more. I don't know. I haven't done a market on it in a while, but it's worth quite a bit more than what I paid. Yeah.
Tell me about the fourplex in Des Moines.
Yeah. So this experience is probably not a positive one, but I had a guy I sold him the fourplex and he wanted out. We had it sold a couple times, fell through, whatever. He's like, hey, Kyle, I'll just sell it to you for what I owe. And I'm like, well, it looks good on paper. And says, all right, he needs out, whatever. Yeah. So I bought it. And then the process of it needed a rental certificate because there was some issues with the city of Des Moines. Mm-hmm. And so I had done a little homework. Okay, what's this going to cost me? Yeah. I probably didn't do enough due diligence on it to know where those numbers are going to be. And everything, of course, was quite a bit higher than what I anticipated. Yeah. And the process of, I've never really tried to get people out of a property before. And I'm thinking, hey, I'll just be a nice guy and tell them, hey, this is what I got to do, city. And I'm thinking, this will be no problem. And of course, nobody moves. And I had to get attorneys involved and, all that good stuff. And that drug on way too long. So then I'm sitting on this, getting no rent. And that was a little bit of an issue. And we finally have just finished it up and now have 3 of the 4 units are rented. Mm-hmm. And, they're getting quite a bit more rent than we were previously. Yeah. But as we were talking about, those are the lessons that we learn maybe the most are the ones that don't go well.
Yeah, correct.
And didn't go well.
Well, with that, what did you learn? What would have been done, say, next time or if you had to do it again? What would you have done differently?
I think maybe stronger numbers. Like one, we were looking at it like, okay, what's it going to be to do some foundation repair? And what's it going to be? And so contractor I'm working with, like, each unit to kind of do it, just kind of rough numbers. And maybe just trusting the rough numbers more than we should have. I mean, what it's like. You get into projects and there's always something you're not.
Correct. You're going to put a wall.
Yes. Yeah. But I think some of the numbers we should have known were quite a bit higher than what they should have been. Mm-hmm. And so I think having a feel for that, I think about we've built some houses and going back to, hey, if I'm going to do a custom home, we're going to itemize everything that's going into this house to lay it out. So when we give a client a number, we're going to stick by that number. Right. And because, we've researched it, the subs have given you that number. Yep. They're going to stick by that number. Don't feel like I had that done on this property.
So I hear you saying apply the same methodology you utilize in new construction when you're going to bid a house.
Yeah.
Apply that same thing to the remodel project.
Yeah. And leave room for unknowns when you start digging into those walls. But yeah.
How old's the property, roughly?
It's about 100.
Yeah. Right. So that creates a whole new set of things. Unlike a new construction where there's a greater level of certainty associated with new stuff.
Yes.
As soon as you get into a 100-year-old property, there is things that become challenging to account for.
Yeah. So we've tried to, since that time, my real estate team, I've got a group. We kind of opened it up and we started an investment group. Mm-hmm. And so within our real estate team. And so as we looked at that, I want to make sure because it was more than just me, like, hey, we've got a better method to kind of solidify those numbers before we purchase a house and finalize it. So we feel better about, moving forward than I did on this one.
Does that change, given the age of that? Does that change your buy box moving forward at all?
Yeah, I still think I got a sense of what I can sell something for by doing quick market analysis. Mm-hmm. And so buying right is always kind of what matters. So I don't think I'd stay away. I've renovated houses before, and I think of one that was early 1900s that ended up being a great project for us and better due diligence on that one than this one. Yeah. And so that's probably the biggest takeaway of what I need to improve on.
Yeah. Do you like flipping properties or do you like holding them?
I like flipping, and not that I just like the process of flipping them. And
is that because there's not a management component to it?
That's probably it.
There's no right or wrong.
Yeah, I think that probably plays into it. I live with this fear of managing properties, and now that's probably amplified after this fourplex we just did, and thinking about renters and getting them out of there. And it was have one guy threaten your life a couple times, and so I'm gonna stay away from that.
Yeah. That'll have you running from management forever.
Yeah.
No, that makes total sense. Looking forward, what are you interested in the investment side? Is it some more flips, keeping rentals, kind of cherry picking them as you see fit?
I actually had a couple opportunities recently, one on the commercial space. I wasn't really anticipating this to be an opportunity. We'll see if it is, as my real estate company is looking for space, opportunity to purchase something as opposed to lease.
Right.
And that piqued my interest for sure. And then an opportunity for another fourplex that is much newer and ready to go and already has renters and nothing to do. And so both of those excited me. We've got, a house in California that has been a great vacation rental for us. And that part has been fun because, I love Iowa,
Right.
but California's a little more fun to go and visit and spend time there.
The weather's a little different.
So my wife and I are going there next week and spend 4 days. And we just had people in there for Coachella and, people in there for this big tennis tournaments there. So that one's a little more exciting.
Yeah, right.
Than a fourplex in Des Moines.
What's unique about that management of a property out of town versus in town, even when you're using third-party management?
Yeah, you have to probably trust them a little more because like that duplex in Ankeny, I can drive by and check it out. And they said, hey, there's a tree that needs trim. Well, let me go look at this and see. Well, if they say something there, I can't just drive by and there's something to do. So having a good relationship with the property manager, which we do, this is our second house we've had there, and same management company because we trust them. They got great people to go and do the work if something needs done. Yep. Hopefully that's not often, but so they've got great resources, and you got to trust them pricing wise. Because I've had another one in Arizona where the property manager didn't have a great gauge and feel of, okay, when do we lower it? When do we raise it? And so we had too much vacancy. And then again, go back to the fact, I'm just trusting someone to do it. Yep. Well, they had prices way too high. So you got to find that sweet spot of, we don't want to just lower it to get someone in, but what's a price someone's still willing to pay? And so these guys in California have done an amazing job of that.
How do you get to the point where you do trust them? What I'm thinking for the audience's sake is there is there someone not in Iowa who's looking at investing in Iowa? And so how do they, these questions, no matter independent of the geography, apply, right? How do you get to a point where you can find somebody you can come to know, like, and trust when it comes to the management of either your short-term or your long-term rental?
Yeah, I think a personal referral goes a long way. I mean, that's what these guys were personally referred to us. I mean, when I sell houses, 90% of the business I do today is because someone personally, they had a good experience working with me and they're referring and love that type of business. And for this, what I found is it was a personal referral because they had a great experience with them. And you're not always afforded that luxury because you may not know anybody in the area.
Correct.
I knew a couple people there that had investment properties. They had great experience with this property manager, and we've had the same. So
in your brokerage business, do you deal with investors very often, or is it primarily homeowners?
We deal with a decent amount of investors. I don't have some massive investor that just buying up all kinds of property, but I closed on one today where, that they were flipping a house. And so right opportunity comes along. I probably got 5-10 people that I work with that if you would bring them the right house today, they would probably do it and jump in, and whether it be a hold or, flip, jump in and do something.
If you're a house flipper, execute the burst strategy, or do double closings and are in need of money, Little Guy Loans is your go-to lender here in the Des Moines area. Time is money. Loan approvals in 24 hours. Closings in 5 days. Little Guy Loans was founded by Neil Timmins, an investor just like you. Since he has been in over 10,000 homes in Des Moines, there's never an appraisal. Houses, multifamily, and commercial property loans up to $1 million. Check out www.littleguyloans.com.
Do you think your experience in investing has helped you as a broker when it comes to dealing with investment clients?
Yeah, I think so. Having been down that road, and again, we talked about this, but the mistakes I've made, which have been plenty, but that learning what not to do, the one that closed today, having that conversation. Well, it was his first one. And, talking with him, it's like, okay, one thing I've learned is like, I made the house too nice. Mm-hmm. And not that you don't want nice things, but you can still make it nice without feeling like I'm turning this $300,000 house into a $500,000 house. And
that you're never going to. You can over improve it.
Yes. And totally over improved it. And, it was a lesson for him to say, okay, he enjoys doing it. He enjoys the renovation part, but what's important and what's not important. And for him, like having that conversation, well, maybe there needs to be more communication even from me and him during the process. Like, okay, countertops, like how nice do I got to go on this, or cabinets, or any of that stuff. Right. And so you learn as you go. And, for him doing that one, it was a great experience. He didn't make as much as he wanted, but learning and going through it was key.
I would imagine some of that is, I'll simplify it actually, simple as you pulling comparables. Here's what's sold in the past. Here's where the market's going to be. This is the product that went into that house. So anything past that, it's not going to move the needle. In fact, you might be going backwards on your profit.
That's right. So finding those comps from the beginning, and when we did for them, but once you're in it and start going,
Do you find that I have seen that multiple times in the past? My experience has been primarily when guys are doing their own work versus when they have crews.
Yeah.
Because there's maybe a higher level of emotional attachment to their work.
Yeah, you're exactly, which is what this guy was doing. He was doing his own work.
Yeah.
And you're exactly right. There was an emotional tie because I am doing this. I want to make sure it looks nice. Yeah. I would live here,
it's a reflection on me.
That's right. Yeah, that's great.
What are you most excited about this year?
I'm excited about the market in general. Everybody's talking about rates and, rates are not amazing right now. And they're not amazing because the market's still going pretty strong. And I was talking to a developer recently and he was talking, hey, if rates drop, there's all these big developers that they got deals ready to go. Yep. And we're going to see the same thing we saw in COVID if that would happen. If rates drop, all of a sudden the price is going to go up 25%. We don't want to be back in that position. Right. So I'm excited where the market is at. I think it feels very strong considering where the rates are. And, we're plugging away right now. So
yeah, seems pretty manageable. Then.
Yeah.
Let's do this. I want to move on to the final segment, what I call the final three. If you had one piece of advice you could give to your 20-year-old self, what would it be?
I mean, invest in real estate. I was Seth Moulton for D.R. Horton. I've talked to him several times. He's like, I wish I would have held on to all my houses because they've gone up in value. And you got to learn those. I mean, one, you got to have money. And when you're 20, is a difficult thing to do sometimes. But we're all those stages in life. I look back and I'm like, I'm 46 now. And I look back at my 36-year-old self and I'm like, man, I wish he would have known this. Yeah. And I know when I was 36, looking back at 26. And so there's lessons that you have to go through and learn. But man, investing in real estate has never been a bad thing, right? I mean, you look, even when the market went down a little bit, there was one little blimp, in the last, 40 whatever years to invest in real estate at an earlier age, I think would have been something I definitely would have done.
Yeah. To invest appropriate levels of debt and then be patient. That's where I was going earlier when I asked you how much the duplex has changed in value. And you only get to participate in that. You only get to reap any of the benefits by participating, by being in it. Oftentimes, sitting on the sideline with liquidity, waiting for the market to change. Yeah. Just doesn't change. Doesn't change that fast. And hindsight for all of us is 2020. We would have bought a ton in 10, 11, 12. Yeah. Had we known.
I was just trying to stay afloat in 2010. So it's like
that's largely what it is. When the opportunity does come, most people are on the sideline.
Yeah. Do you have the resources?
Yeah. And do you have the intestinal fortitude when the day is dark? Yeah. 2 books that changed your life.
Oh, 2 books that changed my life. Well, I loved Rich Dad, Poor Dad. Sure. I mean, probably one a lot of people have. And then another book that changed my life. But trying to think of a real estate book that greatly impacted me. I'll think about that one.
If you were to be cast away on an island for a year, you could only get 3 pieces of data about your business. 3 pieces of data about your business each and every month. What 3 things must you know every month?
Well, I am very numbers driven. I live by spreadsheets. So as long as I can continue to receive those spreadsheets, give me my P&L. We got a few different aspects of my business. We have our online lead generation, money that's going out, money that's coming in. But even within that, we track everything from, did we set the appointment on the call? How many, calls does it take to actually land an appointment? How many appointments to land a contract? I think having those numbers, because I look at those frequently, that would be important. So give me my P&L, those numbers, specifically Zillow's, where we do a lot of our lead generation. Sure. And so they send me those numbers weekly. Yeah. So I like poring over those and analyzing it for our agents. Yeah.
For people that want to find you, they want to follow you, they want to connect with you, what should they do? Where should they go?
Yeah. I mean, you can find us social media, Clarkson Realty Group, Facebook, Instagram, wherever. Yeah. My phone number is 515-554-2249. I'm pretty easy to find there by call or text, but yeah.
Absolutely. Well, we'll put the links below in the show notes for everybody.
Yeah.
I appreciate you coming on. It's a fun story, a deep family history in this business, and you're not even halfway through the career now.
Yeah.
I can't wait to see what happens in the next couple of decades. And as your business grows and matures and your kids come of age, what happens?
Yeah. Have the same guy. We'll see if it stays in the family. I got a son that feels like he has the personality, and we'll see what he does. But yeah.
That's good.
Yeah.
Well, I appreciate being on.
Yeah. Thanks, Neil. Appreciate it.
Thanks for listening. If you're enjoying the show, may I ask a favor of you? Naturally, subscribe so you never miss an episode. But would you rate and leave an honest written review on Apple Podcasts? It does a lot for us here at the show, and I appreciate reading your thoughts. Great guests make for a great show. If you know of another Iowan who would be a great guest, or you yourself have interest in being a guest, well, get on our radar. Visit Investing in Iowa to fill out an application or recommend a guest. And if you want to connect with me one-on-one, go to LegacyImpactInvestors.com. Click on the Invest With Us button in the top right corner, and there you can pick a time for the two of us to get on the calendar and connect. Until next time, keep investing in Iowa.